Today we have an exciting topic that has been circulating among investors and Tesla enthusiasts like how can Tesla, the Ronald electric car manufacturer, potentially achieve a mind-blowing tenfold increase in its stock price? With some Tesla bulls are confident of that, and this will undoubtedly make you a few times richer than you are now. Please be sure to give this video a thumbs up and subscribe to Tesla stock news before continuing. Tasha and Kathy discuss their opinions on this. Let's see what they have to say. In an astonishing interview, Tasha Keeney boosted Tesla's 5-year price target to an astounding $20,000 per share by 2027, which is everyone talking. And this is happening at a time when other Wall Street analysts are lowering their price projections because they are worried about margin pressure. What are they missing then? Let's examine more closely. Their study suggests that this could result in an unprecedented profit margin for Tesla. According to the survey, Tesla is expected to attain the highest return on investment for each battery produced. They're certain that it will change the game. But what about the short-term emphasis on margins? Tasha Keeney believes that Tesla's plan makes sense rather than placing a higher priority on high margins and current prices. Tesla is concentrating on putting as many vehicles on the road as it can because those vehicles collect important data that eventually enhances Tesla's autonomous capabilities. This data advantage will allow Tesla to convert each vehicle into a completely autonomous vehicle. However, Tasha Keeney's team has a slightly different timeline and predicts it might happen around 2024. Regardless, they emphasize that the opportunity for Tesla is immense, with a global market for robo-taxis potentially reaching trillions of dollars in the next decade. Tesla is fully committed to pursuing this opportunity. Elon Musk himself stated on the earnings call that he believes full autonomy could be achieved this year. Let's change gears for a second now. Although several analysts revised their price targets and estimated downward in response to Tesla's recent Q1 earnings report, which did not bode well for investors due to the company's net income and EPS dropping by more than 20% when compared to same quarter last year, our conviction made a bold move by purchasing a substantial number of Tesla shares, expressing their confidence in the company's future and believing that over the next 4 years, Tesla's valuation could skyrocket to over $6 trillion on the day when Tesla stock took a hit. According to ARK Invest, they purchased over 200,000 shares of Tesla in their flagship ARK Innovation EF and an additional 36,213 shares in their next generation internet ETF. This makes for an investment of over $41.7 million. Given that Tesla's closing price at the time was $163, even with the market slump, that's a big wager on Tesla's potential. So there you have it. However, other analysts are dubious and worried about Tesla's future. Despite the uncertainty, Tasha Keeney and Kathy see a different picture. They are actively investing in Tesla because they believe in its disruptive potential and that it can reshape its profit margins and lead to incredible growth with a strong focus on autonomy and robot taxis. Time will tell who is correct, but one thing is certain. Tesla's future is worth watching. ARK Invest, a company renowned for its upbeat view on the automaker, has set a bold new price target for its stock. According to their projections, if all goes well, the price of Tesla stock could reach an impressive $2,000 by 2027. This would represent a significant gain, and it would be worthwhile to investigate how such a feat could be accomplished. However, before we get into the specifics, please show your support by enjoying this article, subscribing, and activating notifications to keep informed about anything Tesla related. CEO of ARK Invest and well-known Tesla enthusiast, Kathy Wood recently presented her company's bullish forecast for the future performance of Tesla's shares, their ideal locations. The price of Tesla shares in 2027 is expected to reach $200, an 11-fold increase. Even their pessimistic projection places the price at $1,400, while the optimistic forecast puts the price at an incredible $25,000 with the $200 share price. The aggregate market caps of the 3 most valuable corporations in the world would be equal to the startling $6.3 trillion that Tesla's market capitalization would reach. Apple, Qualcomm, and Microsoft, it's crucial to remember that Wood's prior forecasts have frequently come to pass, indicating how extremely accurate her stock market insights are. Through her keen eye for identifying the next big thing, her flagship ETF, which focuses on disruptive technologies, has produced significant returns for investors in the past. Wood is optimistic about Tesla's future. Additionally, Wood's acquisition of Tesla shares during the company's biggest price decline since September 2020 confirmed her faith in the company. She is adamant that Tesla will be the largest beneficiary of the AI revolution in driverless vehicles. Wood's optimistic view is not unjustified. The driverless ride-hailing or robo-taxi business is the main source of ARK Invest's optimistic forecast for Tesla's future performance. In a bear market, they expect this division to generate $200 billion in revenue in 2027. In a bull market, they predict an astounding $613 billion in revenue. Tesla is working on creating a self-driving robot taxi, which ARK Invest believes will be the most lucrative aspect of the company's operations. These cars would run autonomously and have the potential to create enormous value in developing markets like autonomous ride-hailing. ARK Invest predicts that by 2027, Tesla will bring in a total of $1.02 trillion in revenue annually, of which 25 will come from the robotaxi business. They also project that by that year, the robotaxi industry, with its potential market of $14 trillion, will account for 58 of Tesla's then current $6.1 trillion enterprise value. Growing investor optimism in Tesla's future results from their expectation that the company will soon introduce a for-profit robotic taxi service. According to updates, the weighted average of the launch dates provided by the Monte Carlo model is late 2024. What's interesting is that ARK Invest prioritizes long-term potential, which is consistent with the assertions of many Tesla bulls who see a bright future for the business. Tesla is a market leader that stands out for its diversification. If it can realize the potential that ARK Invest has identified, especially in the area of autonomous vehicles, its stock price may rise to the firm's lofty target of $2,000 per share. In their most recent study update, ARK Invest presents an open source Tesla model that uses 41 distinct inputs to simulate different possible company outcomes. One of Tesla's main sources of development is its potential robot taxi service, which the investment firm and their simulation project will contribute 67 of the company's entrance prize value and 64 of its EBIT by 2027. ARK Invest discovered that although at lower margins than other revenue sources, robo-taxi revenues accounted for 47 of Tesla's overall sales in 2027. Remarkably, the enthusiasm surrounding Tesla extends beyond automated taxis. The CEO of ARK Invest, Cathie Wood, thinks that buying Tesla stock is a great way to profit on the growing cloud of technologies like ChatGPT and Router AI. Wood views Tesla as a technology business as well as an automaker, highlighting the latter's significant influence on the AI market. Arkhan's top highlights when running at maximum capacity, Tesla's Dojo training supercomputer and its vertical integration approach are vital competitive advantages. In the upcoming year, Tesla intends to double the Dojo's size, which will enable the firm to release updates more often. Additionally, new footage showing Tesla's fully autonomous software updates, which includes a driver completing a ride-haul journey without assistance, indicates that the company is about to roll out in a few select. According to Cathie Wood, the emergence of AI will upend established internet companies like Alphabet, the parent company of Google, which is creating Bard, a chat app that rivals Tupbeat. She claims that artificial intelligence is changing the world quickly and that corporations and the general public are both fascinated by the widespread coverage of technologies like ChatGPT. According to ARK Invest research, Wood's company views Tesla's extensive data library as crucial to ensuring the statistical safety of its vehicles, which gives the company a major advantage over its rivals in the regulatory approval process. As of right now, Tesla's customer and fleet travels more than 120 million miles daily, with more than 1 million miles being driven daily. Contrarily, rivals like Waymo and Tesla have only driven 1 million miles in fully autonomous mode on public roads without the need for a human driver. Based on accident data, it appears that Tesla has already surpassed human drivers in terms of performance. Tesla is a major player in ARK Invest thanks to its presence on several innovation platforms. Perspective, that's all for this video. Please, and remember to subscribe to Tesla Hype. Wood's bet on Tesla is primarily based on the company's potential going forward, especially in the area of autonomous taxis. She thinks that these platforms will offer the biggest AI opportunity in the next 5 to 10 years.